And here are some of the other market stories that we are tracking for you as we fall hard on fears of an economic slowdown. Rick Santelli is tracking all the moves in the junk bond market for us. Wilfred Frost looking at what could be ahead for the financials. Diana Olick is covering housing for us, where we're seeing some glimmers of green. And Kayla Tausche has the details in a big trade decision from the WTO today. So first up, bond yields tumbling after the weakest U.S. manufacturing data in a decade. Rick, junk bonds now on pace for their longest losing streak of the year. What can you tell us about that?
Yeah, it is a losing streak, but historically, it doesn't look like we have to really worry at this point in time about the credit market specifically. I'll tell you what I mean. Let's look at the Barclays high yield spread. And I'm going to run them in a series of charts, and I want you to watch the way it appears, especially when you get to the last chart. So we have a 1 month chart. We're hovering at about 413 basis points spread to treasuries. Okay, so it was 380 at its best levels. You look at a 6 month, the 1 year I like in particular. We all remember how nervous we were in the fourth quarter of last year. Look at the difference. It was up at 560 last year on the Barclays high yield spread. Right now it is significantly below that. Now I'm not saying that it can heat up a bit, and we could also shadow box this sector by looking at the ETF, the HYG, the high yield ETF. When that moves lower, that of course signals you need to worry a little bit more. Here's a year-to-date chart. It has definitely turned down, but it should turn down. You have yields on treasuries at 1 month low closing yields, and of course they keep melting as the day wears on.
Rick, I don't know if you caught Kathy Lean at the top of the hour. She was saying, I don't want to put words in her mouth, but the dollar positioning and setup looked like we could see some weakness from here, that maybe the highs were in.
Well, I'll tell you what, everybody I deal with in my day-to-day life thinks I am too friendly to the dollar. And I understand there's a lot of longs, a lot of speculation as well. But at the end of the day, the global funding issue is tied to the dollar strength issue, and I really think it's going to last longer than many think.
All right. And again, this all plays into politics for the president, obviously, who's been harping on this issue. And on the political front, anything that you add that you're kind of thinking over, Rick, as we speculate about the future of Bernie Sanders on the campaign trail?
There used to be a day where we would be able to talk politics in a market because you could kind of sense it. To me, the long view in the markets nowadays of stocks is a couple of weeks. I think everybody is talking about the issue, but I really can't say that I've seen any evidence that it is impacting current prices. I think yesterday's ISM is the culprit, along with some issues in Europe and Japan, and I think that makes non-manufacturing tomorrow. I'll be bringing out on Thursday at 10 o'clock Eastern. You got to tune in. Kelly, that is going to be a big read with regard to the economy.
So true, Rick, so true. Thank you very much for now, sir. Appreciate it, Rick Santelli. Let's talk about the banks, the impact all this is having for the financials, which are starting the fourth quarter off on the wrong foot. They're down for the second day in a row and on pace now for their worst day since August. Big turn of events considering financials were the best performing sector last quarter. Wilfie, we bring you in to shed some more light on all of this.
Hey, Kelly, yes, indeed. So the main reason for the fall in financials is the fall in yields that Rick was just talking about. Banks have very closely tracked yields since the start of August, falling that month, rising for most of September, and then falling again in the last few days as growth fears have pulled yields lower. The rout that the likes of Charles Schwab and TD Ameritrade have faced as they've engaged in pricing wars this week's also infected the banks. Unsurprisingly, the likes of Morgan Stanley down more than JP Morgan due to a higher portion of revenue coming from wealth management. But it's important to note discretionary wealth management is not retail investors trading with a broker. It's different, and the likes of JP Morgan, Bank of America have offered free trading for a while already. It's a tiny part of their business. Nonetheless, there is a legitimate question of broad price wars across the investment management space. Either way, banks down sharply, 2% or so today, close to 5% down for the week. Kelly?
Wilf, you know these businesses better than anybody. I mean, when we're talking about now another rate cut in October, maybe more in the months to come, is that something you think just kind of hangs over their ability to perform in their earnings now, more so than we thought? Or is it one of these, everybody keeps saying, look, it's not what you think. They can still keep making money. It's not all about NIM.
Well, the one thing it certainly hangs over very clearly is investor sentiment towards the banks, as we quite clearly see with the share price sell-off at even the slightest hint of recession fears or interest rates falling further. Does it hang over to quite the same magnitude of their earnings? No, because there's lots of income they get from fees as opposed to related to interest rates. And I'd also say that when we heard from them about 2.5 weeks ago at the Barclays Financials Conference, they updated their guidance for the quarter, and it was slightly better than expected. That said, clearly in the last couple of days, yields have slipped once again. So I'd say there's a little bit of ability to split the difference between the very clear negative sentiment towards the stock prices and how much this impacts earnings. But certainly sentiment going into the quarter will be a little softer, though the quarter's ended and yields are falling further since the end of the quarter as it relates to the next earnings we'll hear from them.
Yep, as we go into that event in a couple of weeks. All right, well, thanks very much. We'll see you for the close. Wilfred Frost.
Certainly well. See you then.
Let's talk about the home builders. If you're looking for a bright spot today, Lennar is actually in the green. In fact, it just hit its highest level since April of 2018. All of this after better than expected profits and orders for its third quarter. Meanwhile, already low mortgage rates are poised to head even lower after that weak manufacturing data and all the discussion we were just having. Let's get more from Diana Olick now. And Diana, they're really bucking the trend here today.
Absolutely, Kelly. Look, Lennar posted solid Q3 earnings, a big beat on new orders, and that has it in the green today, up over 2% for the day, although not able to pull most of the other builders up. Lennar Chairman Stuart Miller said there may be concerns about the economy, but it is not hitting his buyers.
I know that there's a lot of question about upcoming potential recession and things like that. Our customers don't seem to be viewing it that way, and I think that the housing market in general seems solid and strong and continuing to improve.
The builders today should be benefiting from a turnaround in mortgage rates. They rose through much of last month, but are now falling again as investors flee the stock market for the relative safety of bonds. Pulte Homes is down on the day, but hit new highs all summer, likely on those lower rates. Kelly?
You know, Diana, a lot of people have said that one thing keeping them bullish the last few months has been that the housing data has started to turn higher and perform a little bit better. Should we expect that to continue through the autumn? Is that all intact, or do you think that the macro weakness filters through into people deciding maybe now's not the time that I want to be making a big ticket purchase like this?
No, Kelly, I think demand is certainly there. We were at an open house in Atlanta over the weekend, talked to people about the fears in the economy, potential recession, and they said, no, look, mortgage rates are low. You got to jump in now. One of the people actually said, no fear. You got to get in because it's just a good time to buy. The problem, of course, continues to be a lack of supply and high prices. But if they can get in on that affordable price point and at these very close to record low mortgage rates, then they're going to get in. They simply are.
I saw that house you showed that went for $215,000 to the out-of-state investor. That was crazy. Yeah. People can read your stuff. They know what we're talking about. Diana, thanks very much. Appreciate it today, Diana Olick. Finally, a victory on the trade front today. The World Trade Organization giving the green light for the U.S. to place tariffs on more than $7 billion worth of European imports. Why? As part of its Airbus dispute. Let's get to Kayla Tausche, who's got the details on this one for us, and the reaction in Washington. Kayla?
Kelly, it's been a verdict 15 years in the making. The World Trade Organization, which is the cop on the global trade beat, said the U.S. is right that the European government has been subsidizing French competitor Airbus to help it unfairly have an advantage over U.S. Boeing. Here's what the WTO found. The WTO found that those subsidies were essentially worth about $7.5 billion. As a result, the U.S. can put tariffs on that much worth of goods from Europe. The U.S. trade representative is going to be choosing those goods from a list of about $25 billion in products that it's already put together. But, Kelly, we don't know the level of tariffs, and we don't know exactly how they're going to be structured, whether the U.S. wants to be changing around the items that it's going to be putting these levies on. Brussels, we should note, is planning to fight back. In addition to its own retaliation, Airbus is arguing that Boeing gets its own unfair tax benefits from its home state of Washington, and a decision on that, Kelly, is due early next year.
So this is interesting because $7.5 billion is a small amount, but it is still significant because it's the largest award, and much bigger even than that is whether it opens a new front in the U.S.-European kind of trade skirmish that could develop here. Kayla, how How should we expect that to play out?
Well, you've had intensifying relations between the U.S. and the EU. You have an incoming European Commission president who has spared no words in talking about the Trump administration and its actions against Europe on trade. You have them looking at various ways to hit U.S. tech companies. We've seen antitrust investigations. We've seen digital services taxes. And then you have the White House's potential decision to put auto tariffs on Europe. There's a November 13th deadline to make that decision. So there is a laundry list of things, Kelly, that each side is considering, and we'll see whether some of this weak economic data leads the U.S. to back down or whether they still go full throttle.
It is, though, interesting to see a big trade body basically vindicate Washington's strategy here. I mean, we know the issues with Airbus, but still to have them decide in America's favor and say, yes, this was unfair. I imagine the White House is very pleased with that outcome.
Yeah, and it doesn't happen often, if at all, Kelly. Of all of the tariffs that the administration has put on since President Trump has taken office, nearly all of them have resulted in lawsuits from the counterparty at the World Trade Organization. This one, the WTO, has the U.S.'s back. We'll see what the U.S. decides to do in response.
Yep, absolutely. Kayla, thanks very much. Kayla Tausche in Washington for us. Turning now to Apple, those shares are down about 2.5% today. Josh Lipton is drilling down on what's dragging them lower with the rest of the market here. Joshua.
Yeah, so Kelly, just taking a step back, obviously tech's been a winner for investors this year. Best performing sector in the S&P 500 by a nice margin. Surge there of more than 25%. But today that sector in the red, one of the worst performers. And check out Apple losing steam. Despite that bullish note from the team at Wedbush that we saw this morning, Kelly, they're telling their clients that demand for the new iPhone 11 lineup actually seeing a modest uptick from Asia suppliers. In other words, they're increasing production for those new models. And remember, just to put today's move in context, obviously, Apple, it's surged nearly 40% this year, more than 50% from that low in early January. Rounding out some notable laggards in today's trade, Western Digital, one of your worst performers in the sector. Though, like Apple, bulls have been in charge there, too. It surged more than 50% in 2019. Cisco and Intel also among the biggest laggards so far today. Kelly, back to you.